Good morning, everybody. Welcome to the Market Open CPI August edition on September 13th. In about 10 minutes, we will be getting one of the most consequential CPI reports that I believe we have gotten all year. Now, granted, the market is kind of baked in, and we're going to talk about some expectations over the next couple minutes, and then we'll get the numbers live and we'll go through it. The market is kind of baked in, the expectations for what they think is going to go on with CPI. Most banks, from JP Morgan to Bank of America to Goldman Sachs to Citigroup to Morgan Stanley, 3.6 to 3.7%. That's what they're saying. If we come in below 3.6 on top line or headline CPI, I believe there's going to be a cooling of 0.2% core month over month, which will lead to 3.6% in the headline month over month. It's if we come in below that, I think the market's going to really like that and enjoy it because we have baked in 3.6. Last month we were at 3.2. If we come in above 3.7, that's where I think the market's not going to like it. Even 3.6 can likely set the market up for a potential fall. Granted, the markets will probably be able to take that in and move on from it because 3.6 was expected, and expectations mean everything when it comes to the market. But if we come in lower, it's going to be exciting. If we don't come in lower, it should be normal. It shouldn't be a crash the market type of thing. When we got 3.2, the market was kind of expecting, we got 3 for the first time in June. We were like, oh, can we get to 2s? And then July came to 3.2, and it's like, all right, that's not, it's a little bit stickier than we thought. And so, granted, given the expectations are where they are, it's likely going to be higher. In my opinion, it'll be at 3.6, but the market should be expecting that. We didn't expect it to be 3.2 last time. We knew it would get a little higher, but 3.2 compared to 3 was a little bit rough. 3.6, 3.2 is higher than even that. But because we're expecting it, hopefully the ramifications of that aren't too bad as we get into it. So that's going to be kind of the core thing we're looking at. The reason for a lot of this is because of the lagging indicators of the Fed. Rent and shelter comprise a lot of CPI, and that is falling dramatically if you just look at other sources of data than what the Fed is looking at. But it's going to take a month or two for that to factor into the CPI. So November CPI, which hopefully lets us avoid the rate hike, or that'll be October CPI because it's shown in November, will be enough for the Fed to potentially keep pausing. No matter what happens on this CPI, unless it's ridiculous, we're going to get a pause. I mean, 89% of analysts are like, we're going to get a pause. Now, the November one is where we're likely getting the hike, because if October can't beat September CPI, if we can't just find a way to get it to come lower, that means that's 3 months of increases back to back to back. And that is what we call sticky inflation. So hopefully we would be able to get a little bit lower from there. Victor Hernandez, tattooed investor. Michael Johnson, Midwest, Garcia, Joseph, Stefan, Astrakis, Jebok Music, Ahmad. Thank you all for being here. Joshua, Jason, Benny, Moro, SJ, Kyle K, FR310, Stevie Stone. Thank you all for being here today. So I just signed up for a subscription. Technically, it's free because I'm not paying for it yet. YouTube TV. So I got YouTube TV, and the reason I got YouTube TV, honestly, was because my uncle came over on Sunday and he needed to watch the U.S. Open, and I was like, oh, I don't have the U.S. Open because we don't have cable, but I'll try to get YouTube TV so you can watch it. So we got that, and as I've been using YouTube TV over the past week, I think I might end up keeping the subscription because I get access to CNBC, and as a result of getting access to CNBC, Erwin, thank you for being here. Erwin, I got to send you a text soon. I don't want to. No, you posted it publicly, so I can say Erwin is engaged. I saw that 2 days ago, and I just haven't got a chance to send you a text message. Erwin, investor in Aldea, a good friend of the channel, he is now engaged. He is moving on with his life, so I'm going to send you a text soon, and so we can catch up about that. That was just amazing to see that you found the one for you, and reminded me of how single I am and how I'm going to die alone. Anyway, good morning, everybody. So YouTube TV has been really interesting because CNBC, I get it live. And so because I get CNBC live, not only will we be able to get the CPI results live, but on top of that, I kind of got the feeling that you guys have hopefully gotten with me over the past couple months, which is when I wake up in the morning and I put on CNBC Live, Squawk Box, I'm just getting to listen to something that is soothing and gets me updated with the day-to-day news. And I think that's kind of what hopefully I've become for many of you every morning from 9:20 to 10. I've become this thing that's hopefully soothing to listen to in the background, get a little bit of laughs here and there, or a lot of laughs, you know what I mean? Because your boy is kind of funny. And you get updates about what's going on in the world. And so I think actually listening to CNBC in the morning and how they produce the show, which is an art, by the way. It's not an easy thing to do. And given I've been doing this for 2 years, I've learned how hard it is. It will help me get better at my morning open, not only because it will give me more information to be able to present, but the way and the symphony of which you conduct the information and transition from topic to topic. It's not an easy thing to do. And so I'm learning how to do that a lot more. And hopefully I'll get even better at that. So yeah, hopefully that'll help. But also that means that we get the CPI live when coverage live, and we don't have to wait for YouTube uploaded clips, which is really good with YouTube TV. Is YouTube Premium the same as YouTube TV? No, YouTube TV is $72 a month, and you still have to get ads because it's basically TV that you're paying a cable subscription for. Essentially, it's like cable. Now, granted, I have a lot of YouTube accounts, so I think your boy might get the free trial for a very long time. Don't tell YouTube I said that, but I'm gonna avoid that $72 for as long as I can, and then eventually I'll cave and I'll have to pay that shit. Good morning. You are my go-to for market insight, Charles. Thank you so much. I appreciate it, man. It means a lot. All right, so we got CPI data. This is the website for those that want to get it live. CPI.bls.gov/CPI. This was June's report. So let me share. Can you guys see this? Yeah, you can see this. This is what we're looking for. This will say August 23 in 4 minutes. Consumer Price Index August 2023. And we will get all the information. So as you can see right here, increased 3.2% before seasonal adjustment. That was the report last time. This time we're probably going to see 3.6. If we get 3.5, it is going to be very good. Do we get 3.5? I have no idea. Most likely not, because we are having a little bit of an oil supply. This is oil supply problem. This is Trueflation. It has us at 2.69%. So theoretically, we are already underneath the Fed, or at least the 3% target, a little bit above the Fed's 2% target. So now it's just a question of if we can get there. If we can get down to 2%. Let me just send this message real quick. Okay, cool. So that's that. All right, so 2.69%. Sorry, I just had to send that real quick. So now we're here. Trueflation says 2.69. We're expecting 3.6. A lot of lagging indicators, but index for shelter was by far the largest contributor to monthly oil items. This was back in July. I think that'll stay the same. I think shelter will continue to increase given where we saw rents go in the past couple months. Food and energy is probably going to play somewhat of a role as well. The Saudis have cut supplies by 1.2 million barrels a day. That came out like a week ago, but it was confirmed this morning. And, that's not good for oil. I mean, oil prices haven't gone up dramatically yet. It's still $3.30 in New Jersey, but it's probably going to go to like $3.60, $3.70 over the next couple of days if this gets really bad. And the strategic oil reserves are also like, we haven't refilled them in a while. And we refused to refill them at 60 because Biden wanted a better deal. And now they're at fucking $90. So yeah, we've got some issues going on. And we've got to figure this out. Am I the only one finding this ridiculous, whether it will be 3.5% or 3.6%? Look, well, the reason you're in this live stream is because you care if it's 3.5 or 3.6. A lot of people say don't focus on the short-term noise, just focus on the long-term about the markets. I think that's a ridiculous argument. Obviously, mentally, you need to care about the long-term of the markets, but the whole point of life is to live within the moment and deal with the short-term movements and news updates around life. If that's the case, nothing in life should excite you. Nothing in life should be interesting because it's always about the long term. So if that's the case, turn off all your social media, turn off all your financial updates, get rid of Bloomberg. Don't ever look to CNBC. In 10 years, just look at your portfolio. That sounds pretty boring, right? Like no one wants to do that. The reason you consume content or media that has to do with any type of news is because you're interested in the world. And so I think this stuff does matter. Long term, does it have the most impact? Obviously not, but it is part of the day-to-day journey of being an investor. And to be honest, that journey requires you to be attentive, if that is the correct word, the correct way to use it, every single day, because that's just the process of engaging with news. So I think that is important to be able to figure that stuff out. Okay, so I'm refreshing right here, August 2023 at 8:30 a.m. We will get the information. I've got CNBC live right here as well. So I'll be sharing that once we see, and we will know what we have. We will know what we have. He left the chat. The guy who commented said, "LOL, I couldn't disagree more. Take care." It's funny because I said, "Well, why are you in the live stream if you don't care about the day to day?" And he said, "Yeah, I couldn't disagree with you. Take care." And then he leaves. Well, all right. I guess you'll get your information from somewhere else. But anyone who says, I only care about long-term, I don't care about day-to-day news updates, you're lying to yourself. You obviously care about day-to-day news updates because that stuff matters in the context of just knowing about your investments. And it's important at the end of the day. So here we go. All right. It's out. 3.7. 3.7. There you go. Over the last 12 months, all items in the index increased 3.7%. There we go. It is 3.7. I'm looking at the S&P. On the second screen, we are down 0.26% on the S&P, 3.7%. That is what we got. The consumer price index for all urban consumers, CPI, rose 0.6% in August on a seasonally adjusted basis after increasing 0.2% in July. The U.S. Bureau of Labor Statistics reported today over the last 12 months, all items increased 3.7%. There we go. 3.7%. Josh says if you have calls, it matters. Yes, that's important. Kelly, hello. Thank you for being here. All right, let's read a little bit of this and then we'll get deeper. The index for gasoline. Gasoline was the largest contributor. Remember in July, it was shelter. July was shelter. August is gasoline. So the Saudis, they definitely had an impact to the monthly all items increase, accounting for over half of the increase. So more than 50% of the 3.7% increase, or sorry, the 0.6% increase was, so more than 300 basis points was because of gasoline. Also contributing to the August monthly increase was continued advancement in the shelter index, which rose for the 40th consecutive month. The energy index rose 5.6% in August, as did all major energy component indexes increased. The food index increased 0.2%. Those eggs are still pricey in August as it did in July. The index for food at home increased 0.2% over the month, while the index for food away from home rose 0.3%. Okay. The index for all items less food and energy rose 0.3%. So if you take out gas, you take out eggs, you take out all that stuff, we're still up 0.3%, which means it still would have been in the 3.5-ish range following a 0.2%. So it's higher than it was in July. S&P 500 now at 445. It's down 0.2%. Not that bad, to be honest. It's not that bad of a decline right now. Indexes which increased in August include rent. We expected that. Owner's equivalent rent, motor vehicle insurance. It's the hardest time in the world to own a car, $788 a month on average. So buying a new car right now is just not a good idea. So it makes sense that motor insurance is up as well. Medical care, personal care. The indexes for lodging away from home, used cars and trucks and recreation were among those that decreased. This is correct. Used cars is down 15% month over month. And if it falls another 20%, we're gonna see car prices really start to go down. But as of now, we still have to wait for that to happen. Okay, there you go. There's your report. So let's dive a little bit deeper into some of these numbers. So there you can see right there, 3.7% all items, unadjusted 12 months ended August 2023. Again, Truflation has us at 2.69%. So some of those lagging indicators might just not be there yet in the context of the Fed. Let's actually go to CNBC real quick, and then we'll get to the report as well. So share this tab.
Experiences I've had.
2022 to find a bigger number when it was up 0.7. Actually, in March, it was up as well. So now if we consider that the high water mark here in 2005 was up 1.2, yes, we've made progress, but this follows up 0.2%. Strip out food and energy, up 0.3% year over year, up 3.7%. That is hotter than expected, hotter than the rearview mirror. And 3.7, the last time we were anywhere near there was up 4% in May. And if we look at year over year core, which in my opinion is probably the most important, 4.3%. Now, this is interesting. It's down from 4.7, exactly as expected at 4.3. But once again, let's go through the litany here, okay? We haven't been below 4% in this metric going all the way back to May of 2021. Last year, over half were above 5%. So this is still quite sticky. What has the market done? We've gone from a 431 yield in 10s to a 433 yield. So at 433, we're up a handful on the session. You can see that 2-year note yields have moved up to 507, 508. Currently, the high yield close there is 508. These are very important technical levels. And if we consider the pre-opening equities have gone from, as Joe pointed out, down 12, 13, 14 in Dow futures to down 75. Now, if we consider the year-over-year numbers, the 3.7 especially is something to pay close attention to. And of course, that includes food and energy. But no matter how you slice it, whether you separate those out or not, the Fed committee is certainly not in sync with most Americans or even other economies. that don't separate those out, especially at a time where the transition, as ugly as it may get with regard to EV, is one of these sticking points that could keep not only energy and electricity costs higher, but all the cottage industries associated with the transitioning and the auto industry. Joe and the panel, back to you.
All right, Rick, stay with us. For more on the new data, let's bring in Michael Strain, Director of Economic Studies at the American Enterprise Institute. What'd you say? I'm sorry. Emily Gee, Senior Vice President for Inclusive Growth at the Center for American Progress, and our own Senior Economics Reporter, Steve.
We'll let them talk for a little bit, and then we'll get to the report.
Leisman, Steve, we'll go to you first. It's weird, isn't it? Everything, economists did a pretty good job of forecasting, but it still doesn't kind of cause a little agita.
Yeah, I mean, look, I kind of see good news in this, Joe, and, people can throw things at me if they like, but the thing that stands out to me, I just want to double check this. Owner's equivalent rent came down again, just double checking that. Just want to get the number right, but we were at, I think 0.4 is the number we
S&P is green, folks. S&P is green. It's not down anymore.
have. So that's a help. And when I look outside of the energy complex, Joe, it looks like prices are pretty well contained across the board. And by that, I mean, you did have a pop in airline fares and motor vehicle insurance, which raised transportation services 2%, but medical care services up 0.1%. Some of the other elements in here, used cars fell again 1.2 percentage points. So Rick can go out and get himself another jalopy if he likes. And food at home was pretty well contained at 0.2%. Food away from home, 0.3%. So we're not as yet, and this is why you got to be careful here, seeing a bleed from higher energy services into other prices immediately. There may be other issues down the road. There could be some pop-up in inflation expectations to worry about. But for the moment, the surge we got here is in energy services. And the question becomes whether the Fed finds comfort in the core, which has been coming down. It is a little hotter than expected, as Rick said, but the year-over-year rate has been coming down.
Emily, we just had Sean Fain on. We've been talking all day about where some of this inflation is really, what's the root cause for a lot of it, and some of it is still labor. At the Centers for American Progress, I'm just wondering what you think of the summer of strikes that we're in right now. Are these going to be the low numbers we're seeing now once some of this filters through? Some of the increasing wages that we're seeing. I mean, the UAW is asking for either 40 or 36%. And is that a good thing, do you think?
So I think we have to look at the big picture. We do expect some month-to-month increases or decreases, just like the stock market. But the overall trend does show us that inflation remains moderate. Just for sake of comparison, last year at this
Agreed.
time, we were at an 8.3 annual inflation rate. And we are seeing prices for some core consumer goods like chicken and eggs and used cars actually come down in July. But I do think that it's important that we, keep watching the unemployment numbers as well. We're seeing steady and healthy and sustainable growth in jobs, but we'll also, we think that the Fed should proceed with caution as it considers future rate hikes to make sure that we aren't, raising rates too high and possibly sending the economy into recession, which would be the worst thing for workers.
Okay, so let's talk more about this inflation report. By the way, thank you 271 people for being here. I do a market open every day from 9:20 to 10. This is the first day I'm doing it early at around 8:20, so I'll be here till 10 o'clock. So you got me here for another 90 minutes talking about the markets. After we get through some of this inflation stuff, we have a ton of headlines to talk about, including recaps from Apple's events yesterday, updates on the ARM IPO. We've got United Auto Workers are striking. Apparently, I just found out about this a couple of days ago. There are 120,000 people in the United States of America that work at Ford, GM, etc. They're going on strike. They're asking for more wages. And if they produce less cars, that's not good for inflation. So we got a lot to talk about there. Oil cuts. And also for my Palantir people, which I hope is all 270 of you. And if not, what are you doing? You got to learn more about Palantir. We got a new press release today in the world of Palantir, which is a very important press release. The market doesn't get the press release. People are not going to understand the press release. I just did a video recorded about it. It'll be out in an hour, but I'm going to give you guys the juice of that video. This is a big press release coming before AIPCon, which will be tomorrow. And this press release is one that most people are not going to understand why the network effects were so vital for them to even be able to get this deal. So we're going to talk about that all over the next 90 minutes. CPI. So let's get deeper into what's going on in CPI. I agree so far with the headlines in what some of these analysts on CNBC are saying. CPI is not that bad. And that's why the market is barely down. It was actually green for a second. If you look at the recent picture I tweeted, it was green. We were at 446. Now we're at 445.5. And it was green because outside of gas, as you can see right here, the index for gasoline was the largest contributor to the monthly all items increase, which means energy. It was pretty good. It wasn't too bad. I mean, inflation's up, but it's not up as aggressively. Remember, at this time, we were at 8.3% September of 2022. October 13th is when the market bottomed, or October 14th last year. I think S&P at 340 around that time. S&P's at 445 now. So if you bought the dip at that time, it was not bad. And buying the dip then with 8.3% inflation was not an easy thing to do. So if you did it, this is when Meta was getting close to $80, right? Like, Mazel tov to you. It's a good thing. So let's get in a little bit more deeper into some of these numbers. Energy index rose 5.6% in August after increasing 0.1% in July. Gasoline index increased 10.6%. There is your real, that's the real reason why, we got the increase in energy for CPI. Other energy components also increased in August. The index for electricity rose 0.2% after decreasing 0.7%. So we went from a decrease to an increase. Natural gas increased 0.1%, following a 2% increase. The index for fuel oil also rose in August, increasing 9.1%. Despite the August monthly increases, the energy index fell 3.6% over the past 12 months. And that's the good thing, right? 12 months ago, energy was 3.6% higher than it was right now, which is why gas prices have normalized. I think around this time, I was paying $4.30 at the pump. I remember I paid $4.99, and the reason they didn't put 5 on is because I think the gas stations in New Jersey didn't want to psychologically get the consumer from even coming to the gas station. That's why they made it $4.99. They're like, all right, we'll sacrifice a cent, but you basically got to pay California prices here in Jersey, and so that has been tethered off for the past year now, which has not been too bad. The gasoline index decreased 3.3% over the past 12 months. So gas is 3% cheaper than it was 12 months ago. Obviously, still increased a lot in the month of August. While natural gas index fell 16.5%, fuel oil index fell 14.8%. Remember, we had oil at 120 or some ridiculous number a long time. Let me share this real quick. So this oil's at 91 today. So we got to 91 year to date. Let's go 1 year. So yeah, look at this. Wow. That's interesting. Look at this. September 14th, 2022, oil was 93. Look at where it's at today. It's at 91. Wow. That is incredible. It's at 91. That is so we got to a low of 71 March 2023, and it's right back up to those same levels. This is why, folks, if oil was at 73, we might have inflation coming in at 2.9, 2.8. I mean, if oil actually sustained itself and was in even June levels, we would not have 3.7%. We would be crashing when it comes to inflation, and the Fed would absolutely not even be pontificating. Forget thinking. They would not be pontificating the potential of a rate hike. But, oil's at 90, which is where it was September 2022. And so that's why we're seeing a little bit more hesitation from the Fed to be very dovish in regards to a definite rate cut anytime soon. All items less food and energy. The index for all items less food and energy rose 0.3% in August after rising 0.2% in July. Shelter index increased 0.3%. This should go down over the next couple of months. Rents are coming down. There's a lot more inventory of apartments being entered into the overall market space. If you just go to the St. Louis Fed and you see the inventory of houses going up. On top of that, Warren Buffett invested some money in a ton of stocks, about 3 stocks last quarter, as per his 13F filings. And they were all home construction builder companies. And that's neither here nor there, but it gives you a little bit of insight that there's a lot of manufacturing going on in terms of the supply of housing, which is going to be incredibly important to be able to get demand to at least stabilize. Right now, no one wants to sell their house because, why would I want to sell my house and then go pay an 8% mortgage? And so you need a lot more inventory to get onto the market to be able to get prices to overall come down. And that's going to happen over the next couple months. And when that does happen, CPI is going to drop like a rock because those prices for rents and new houses, they can't keep up the way they've been keeping up. Like, it's going to have to come down as you get more inventory onto the market. So that's one catalyst we should look forward to, but it might take a couple months for the Fed to be able to recognize that. Truflation has already recognized that in their data. The Fed, obviously, it takes some more time for them to get there. Medical care index rose 0.2% in August, so 0.2% more expensive to get medical care after falling 0.2% the previous month. The index for hospital services increased 0.7%. Index for physician services rose 0.1%. Prescription drugs index rose 0.4% in the month of August as well. Amidst hoping house prices come down, I actually want to get my first property. Hopefully, if things go okay, money-wise, by next summer. I'm thinking of seriously getting into it by next summer. But look, if there's not any decent prices by next summer, I'm just going to hold off on it. And by next summer, I'll be getting closer to 27. I'll be 26 in October. So October 2024, I'll be 27 years old. If I could put a down payment on an investment property and just get someone to live in there and pay rent, which would pay for the mortgage by 27, I would really, I think that would be cool. But it has to, I'm not going to pay ridiculous prices for that. So hopefully house prices do go down to be able to even have a chance to do something like that. The index for all items, less food and energy, rose 4.3% over the past 12 months. Shelter index increased 7.3%, accounting for 70% of the total increase in all items, less food or energy. So that's interesting. Shelter and gas were the core reason for why CPI is up outside of food and energy, which makes sense given what we talked about with gasoline prices, Saudi oil cuts, and obviously rents being as high as they've ever been. To live in New York City, you have to literally chop off your arm. You have to put it in a box. Then you have to chop off your leg, put it in another box. Then you have to chop off your dick and put it in a final box, and you have to give it to the landlord. And that's how you can pay. That's how you can afford to pay rent in New York City. Or you have to work at like Facebook as a senior L5 software engineer. One of those two. You get one of those two done, then you can definitely afford to live in New York City. If not, then tough luck. So that's your CPI report. That's what we got right now in the context of CPI. Caios Perez, good morning with 7 exclamation points, everybody. Good morning. Thank you for being here. All right. So if you're just joining, thank you, 323 people. CPI came in at 3.7%. The market has pretty much swallowed that report and not really had too much to do for that. S&P 500 down 0.16%, really a nothing burger in the context of an actual decline. The market expected 3.6 to 3.7. All the major banks expected that number. We got that number a little bit toward the high side, but nothing too bad because oil and housing was the main reason for it. Oil and housing will eventually come down over the next couple months, and I think the Fed understands that. So a pause is still likely for September. The hike is possible if September's CPI, which comes out in October, is going to be bad. Then November, we might be able to get a hike for the FOMC in the FOMC meeting. But for now, it looks like a pause is still on the table to be able to get there. Garcia says, Jay says, why is auto insurance up so much? Austin says, Jay, I got you. I underwrite insurance. Okay, but awesome. Austin, you're giving awesome analysis here. So Austin says, number 1, repair costs are up due to sensors and fenders. 2, texting and driving. 3, rising medical costs when bodily injury. Wow, this is interesting. So this is why I love having interactive chat, because we can actually crowdsource information. So Jay says, why is auto insurance up so much? And for those that are just tuning in, CPI auto insurance was up dramatically month over month. And Austin, who works to underwrite insurance, so he's in this space, says repair costs are up due to sensors in the fenders, texting and driving, which I'm not going to incriminate myself live on the stream, but let's just say my mom ordered a sticky thing for the car the other day, and she made me install it because she was driving with me the other day, and she saw some of the habits I engaged in while I was driving, and so like she literally forced me to install this thing on the car. So I think, Austin, you're correct about the macro level trends around texting and driving. That is, and unfortunately, that does lead to bad things happening. And then rising medical costs when bodily injury. I think on top of that, interest rates are 5.25%. So when you talk about buying a new car, it's $780. Let me actually pull up a tweet that highlights this really well, and then we'll get into the new Palantir deal today, and we'll talk about that for a little bit. If a new car is costing so much, the insurance on that car, I don't know if this is the exactly the correct analysis, but I would imagine insurance will be a little bit more expensive if you're paying a lot more for the car. Maybe, Austin, you can correct me if there's a correlation there, that if you're paying more for a car, insurance will also pay up a little bit. And that might be an explanation as well. I pay $175 a month for my insurance, and I pay $311 for my Honda Civic that I bought in 2019. I put a $5,000 down payment on it. It cost $21,000, so I had $16,000 to pay off. By July of 2024, I will be done paying off that car. So I pay $311 plus $175, around $500 a month for me to own a car in the United States of America. Right now, the average cost to buy a car is $788, which is insane, right? So it's not that easy to own a car. Let me pull up this tweet real quick. Where is this account? Auto car, new car prices. Let me pull this up. Let's see if I can get this tweet real quick. Again, Twitter search. It's not good, man. Twitter search. If they could just, oh, here we go. I got it. See, literally, I had to go to Google. I had to go to Google right now, type in the subject of what I think the tweet is about, because I remember a couple of words from it, and it pops up before it pops up on Twitter. That's insane. That's absolutely insane. Twitter search has got to figure some of this stuff out. Kaio says, Amit, here in Nebraska, my brother and I have the cheapest rent, and no, we are not slumlords. That's amazing. That's what you get for living in Nebraska. Look, man, people say they want to live in New York and California for the lifestyle. Man, fuck it. Go to Nebraska. Go to the Omaha. Go to Omaha. Go somewhere cheap and just save them money. That's like that. That is nothing wrong with that. Philip Rizzo, thank you for being here. Good morning. Got to support Amit. Thank you, man, for being here. In terms of difficulty on a car, I don't think any country can beat Singapore 1000%. I know a bunch of people in Singapore. In Singapore, it's $100,000 to buy a Honda Civic because they keep their streets so clean that they don't want to encourage automobile ownership. So literally, like it's a lot of money. You have to get like a certificate from the government, all this shit. So, okay, here we go. This guy tweeted this stuff. Yes. So speaking of affordability, percentage of car payments above 1,000 in 2023, 29% higher than in 2022, 127% higher than in 2021. So the average people paying $1,000 a month for a car is 127% higher than it was 2 years ago, and 30% higher than it was in 2022. Here we go. This is the tweet. Average monthly payment for new vehicles financed hit an all-time high of $738 in August. Who's paying $700 for a car? I mean, like, goodness gracious. $700 for a car? I mean, and if that's for a Honda Civic, I can't imagine what the price is for a Mercedes or a BMW or a fucking Tesla. Like, that's just insane. That's incredible. In West Virginia, our minimum coverage went up, which doubled my premiums. That makes sense. If your minimum coverage goes up, the premium goes up. That's another good point as well. Austin says auto values going up does drive up claim costs when the car gets totaled and needs replaced. Okay, so that makes sense. So my analysis for why the price of a car going up correlates to higher insurance costs makes sense, because Austin, you're saying that if the value of the car goes up, then if the car were to get totaled or in an accident, obviously the insurance would go up because it costs more to fix the car. So that makes sense that if the car price goes up, the insurance has to go up as well. That's why I was thinking of paying off my entire car, but I'm like, yo, I'm locked into such a good monthly payment on the car. I should probably just pay the monthly payment and keep the capital and get 5% on like Robinhood in it, right? Like, why would I pay off the $3,000 that I have left if it's only $300 a month when other people are paying $700 a month to buy a car? I mean, it's absolutely insane. So it makes sense on how that correlation goes on. Garcia says, if you get a car payment of over $1,000 and you don't have $1 million in the bank, you're a sucker, in my opinion. Can't say I disagree with that, man. Can't say I disagree. I mean, I have a friend who, let's get into the Palantir partnership as well. Let's get into that right now. I have a friend who bought a, what is it? He leased a BMW, or like a I Series 8 or whatever it's called. These cars have the most ridiculous I Series 8, IMW. It's like, what, or whatever. Right out of college when he was 23. And he picked me up one day. He was a year older than me. We drove to New York City. And he was just telling me about the car. And I'm like, dude, like, you just graduated college. Like, you're not making $1 million. Like, you're paying for this fucking, like, it just blew my mind that people, and then he returned it after a couple of years. It's like, so what did you get? He doesn't even post on Instagram. You didn't even get any fire Instagram pics from that. You literally got like the satisfaction of driving an overpriced car when you graduated college for your fucking ego. Like, I mean, I love that guy. He's a good friend of mine, but it's just not the right way to think of life, in my opinion, especially not the right way to think of personal finances. All right, here we go. Let's get into the Palantir news this morning. 8:54. We got the market open in about 36 minutes, and we got a lot to discuss after this Palantir deal. Now, this Palantir deal is very important. I'll discuss why it's important in a second, but I want to go through some headlines on it, and then we'll keep going from there. SoFi, by the way, is at $9.02, 0.22% in the pre-market. S&P 500, 446, up 0.09%. So the market ingested and swallowed the CPI news and basically said, we don't care that it's up that much because it's probably going to come down a little bit. Palantir Technologies has signed a partnership with Titan defense firm Babcock. Palantir Technologies has signed a defense contract or a partnership with Titan defense firm Babcock. Now, if you are immature, you will not be able to get through me reading from the Babcock partnership. If you are not immature, then the Babcock partnership should have zero impact in terms of your ability to understand the analysis that I have to make on the Babcock deal with Palantir. Okay. Let's talk about this. Victor says, is Taiwan in any contact with Palantir? I'll talk about that right after I talk about this deal. So Palantir is enabling the Babcock International Group to strengthen its digital defense capabilities through an enterprise agreement, which was announced today at a defense conference in London. The partnership will leverage Palantir's AIP, the AI-enabled instance of the company software that will aim to transform how the Babcock workforce captures, integrates models, and builds data-driven solutions. Unlocking the power of data in this way will enable Babcock to make better informed, data-driven decisions, maximize platform availability on customer assets, and understand how to derive even more value from an organization's data. Now, why does this matter? Let me read a couple of quotes, and then I'm going to give my analysis for why most people are missing the entire point of this press release. And you guys, because you're here in the morning, are going to get front and center why this press release is so important, why the market doesn't get it, and why most shareholders really aren't understanding the crux of the deal. So Guy Williams, head of defense at the UK at Palantir, says, we're excited to partner with Babcock as they realize their digital defense ambitions. Together, we are driving forward together a new era of UK's defense enterprise, one that is pioneering, modern, and leverages Palantir AIP. So this is an AIP deal. This is also a Foundry deal. If you go deeper into the press release, they're talking about the ontology. So I believe they're selling them Foundry and AIP, probably charging for Foundry, giving AIP most likely for free. Our partnership with Babcock will help ensure the MOD, which is the Ministry of Defense in the UK, maximize operational output at pace, whilst empowering Babcock's talented workforce to become truly digitally enabled. And they're talking about a bunch of different things on how they're going to be able to use it. Last paragraph, let me read it from here. Across multi-domain operating environments and within the often intricate defense supply chain, the partnership will deliver a data picture that will act as a single source of truth across the ecosystem, helping employees make better strategic decisions and align teams in the Ministry of Defense digital defense backbone. Employees will also be able to leverage cutting-edge AI and large language models that can present a range of actions to execute accordingly around equipment support, maintenance, training contracts, and ship building for Palantir and Babcock. Okay. You guys are doing a counter in the chat. Oh my God. You guys are hilarious. I love it. So why is this so important? Thank you, 332 people, for joining. We're starting our day off with a new Palantir partnership. Why is this deal so important? Palantir signing a deal with international UK defense commercial enterprise Babcock. Okay, this gets pretty deep, and let me discuss it a little bit, and then we'll move on to the next topic, and we'll see what you guys are saying in the chat. Babcock is a company in the UK that's publicly traded. They are worth, or I actually don't know their market cap, but they did $5.3 billion of revenue so far in 2023. Let's see if I can get their market cap real quick. Babcock company market cap. Let's see. Can I get their market cap? I don't think I can find their market cap, but they did 5.3 billion in revenue, which is important, right? 5.53 billion in revenue is a pretty big company. Okay, so you got $5.5 billion in revenue for a company that does international defense. Now, why does Palantir get this deal? This, to me, is a broader thesis around understanding the network effects of being a Palantir shareholder. Palantir acquired the country of the United Kingdom. You know how they have the strategy acquire land, expand, right? So get the customer, expand it, and then scale the solutions you have with the customer. That's been their kind of growth trajectory in terms of increasing the revenue TTM per client and the net dollar retention. I believe they're doing the same thing with countries. Sachin, thank you for being here. So Palantir, in 2020, the COVID pandemic happens, right? And Palantir shows up when shit hits the fan. The UK calls them. They're like, hey, this vaccine stuff, we have to administer it. Can you guys help us? Within a month, Palantir has their operators on the ground. They're forward deployed engineers building software. And within 3 months of the vaccine release, it is distributed to everyone in the UK. Whoever wanted a vaccine was able to get a vaccine. There was no delay in terms of getting the vaccine, even though the NHS has horrible wait times and backlogs, all that stuff. People got the vaccine because Palantir was there. The UK government sees that shit. They're like, holy crap. These guys in 5 months were able to deliver vaccines to anyone. They have a population of 70 million people that wanted it. What else can they do? And then they get this contract, then they get this contract, then they get that contract, all working within the NHS. And then what do you know? A couple years later, the NHS is thinking of completely digitally transforming their entire enterprise. And they're like, hey, we got $500 million. Maybe Palantir can do something for this. And they start the procurement process for Palantir to be able to get this entire NHS deal. Okay. And we'll find out about that in a couple weeks. So Palantir basically acquires the United Kingdom as a client back in 2020 for unforeseen circumstances, which was a global pandemic. And then they do such a good job. They get all these different contracts because they're the only ones that can really get the job done. The UK is not used to really cutting edge software technology companies doing the right thing. And then December 2022, Palantir gets another deal. And the deal Palantir gets in December of 2022 is with the Ministry of Defense in none other than the United Kingdom. $91 million. December 21st, 2022, UK Ministry of Defense awards Palantir £75 million enterprise agreement. This was, to me, back then, looking at this, like, oh my goodness, Palantir is embedding themselves within the very fabric of the United Kingdom. First, in their healthcare system, in terms of vaccine distributions and COVID and all this stuff, now potentially with the NHS contract, and now with the Ministry of Defense. What does that mean for today's deal? Today's deal with Babcock is a company, and I go deeper in the video today that I was doing, but the TLDR is this is a company that works intimately with the Ministry of Defense. So this is a company that makes hardware, helicopters, guns, tanks, all that stuff. They make it all for the UK Army, the British Army, and they work incredibly close with the Ministry of Defense. So what is the point here? What I'm trying to say is that Palantir acquiring the United Kingdom as an entire client, embedding themselves within one part of their government, which is the healthcare systems, being able to do exceptionally well, gets them a contract with the Ministry of Defense, gets them embedded into the governmental agencies of the United Kingdom. And then a year later, they get a deal with one of the leading enterprise commercial clients that does work for the MOD, the Ministry of Defense. And what we're seeing here is a trifecta of network effects. And that's what's incredibly important. Palantir works with the UK government in one sector. That sector leads them to get a client, the Ministry of Defense, in another sector, which defense is different from the healthcare stuff. And then because they're working with the Ministry of Defense, they get a commercial client, which is good for international commercial revenue growth, which has been dog shit really over the past couple of quarters. They need to be able to fix that with Babcock International Group. Then on top of that, if you read the press release a little bit more deeper, Babcock works intimately with the Ministry of Defense and Palantir is a partner with them. Palantir is not saying, oh, take our software and just like have a good day. Palantir is building software with Babcock. So the way this partnership is going to work out is Palantir is going to be working with not just the Babcock employees on how to build the best supply chain optimization software, asset management software, etc. They're working with the Ministry of Defense because they work intimately with Babcock, all three of them, to be able to create the right suite of software products, the correct forms of ontology for Babcock. And what that is going to do is only more deeply ingrain Palantir within the UK government's Ministry of Defense, because now they're working with one of the leading commercial enterprises that's working with the Ministry of Defense, that's been working with them for the past 20 years, and lead them to, in my opinion, get more contracts with other governmental defense agencies in the UK, and on top of that, other commercial defense enterprises in the UK. That is the exciting part about this partnership. This partnership will not be reflected in the stock price. This partnership will not be respected by, most shareholders. They'll be like, okay, whatever. It's a nice little deal. But that's the network effects you're betting on. The impacts of that you're not going to see right now. But in the next 5 years, when Palantir is the de facto modern operating system software for not only a commercial enterprise like Babcock, but for the entire Ministry of Defense in the UK, how many more government contracts is that worth? How many more commercial contracts is that worth? And now here's the kicker. AIP, we probably gave it for free. Right? We're charging for Foundry. We gave AIP for free. Babcock does $5.3 billion of revenue per year. How much is AIP worth to Babcock? Because if it's worth $5 million, if it's worth $10 million, if it's worth $20 million to them because it's just that useful and there's nothing else that's integrating LLMs for defense in a meaningful way, is it worth $2 or worth $200 million? Like, what is it worth? And I think that's why it's also good that Palantir is giving it free, because we don't know what the hell it's worth. And if it's worth a lot of money, then Palantir is going to be able to monetize a lot on AIP in the future. But it's because they were able to do something for the UK 3 years ago in 2020 when the whole shebang started with them integrating themselves into an entire country. And then on top of that, in 2 weeks, you might get a $611 million deal to be the backbone for the entire healthcare system for 70 million people. This is why Palantir is the most exciting company in the world to not only cover, but to invest in, even if the stock price doesn't necessarily show the excitement. It's one of those things where you got to read between the lines and just hope you're correct on the thesis. But the thesis is starting to play itself out very clearly, given you see these partnerships every single day. That's going on with Palantir. So those are my thoughts, and that's the updates on the Babcock partnership. All right, how many times did I say it? 30 times. I would be laughing the entire way. See, I'm mature. I don't need to laugh. You guys had to laugh. And you know why I addressed the mature part about Babcock? Because if I said nothing about Babcock in terms of maturity and implicitly made the analysis that I made about laughing about the name, you guys would be laughing so much in the chat. So I had to address it because you guys are immature. So I was doing this for your sake to address the fact that the word cock is in Bab, and I needed to be able to do that for you guys. It was for your sake. It was not because I wasn't mature enough to deal with it. So let's go to CNBC. Let's see what they're talking about. Let's get an update on what's going on. Market open in about 21 minutes. Let's see what they've got to say. Then we'll talk more about CPI.
Well, that question, I think, has a pretty easy answer, and the answer is yes. The Fed needs to get inflation back on a path to its 2% target.
So, Rick, we said that the last, the hard lifting might be ahead of us in terms of getting down to 2% inflation. Do you think that it seems like when in real estate there's a seller's market and there's a buyer's market? Do you think we're in an employee market versus an employer market with what that interview we just had with Sean Fain? Rick, is that going to make it even harder to get down to 2%? I mean, we are going to 40% is a pretty big hike in wages.
Oh, yeah. Wages are guns hot. There's no doubt about it. And I think the UAW president today was very enlightening. There's going to be very little negotiation, most likely below the 30%. Maybe there's going to be more negotiations on the 4-day work week, but no matter how you slice it, there's upward pressures there. And it's not only there, it's in trucking. And of course, we see all the issues with regard to diesel fuel and all the issues with gasoline and the future issues procuring enough to keep all the logistics running efficiently. These costs are going up, Joe. You nailed it. And as far as the Fed goes, I think that many of the issues post-COVID are doing exactly as logic would expect. It's the things that we've changed during COVID to deal with COVID and post-COVID, the spending, the programs with the fancy names like, inflation reduction that don't reduce inflation. It's the OMB having so many numbers wrong that are moving up. It's the budget deficit moving from 1 trillion to 2 trillion. These issues are all big. And when I look at these numbers and then I look at the market, so the market initially moves up to 434 and a 10, then it moves back down to 428, 429. We see that the equity markets, after being down 14, they moved down about 75. They actually moved up for a while. My point is that the market volatility demonstrates that investors are a little confused here. They're getting mixed signals from many of the Fed members that they seem to be pleased here, and reading between the lines, they don't really seem to want to raise rates more. And I understand higher for longer is going to do its work. And the oddest part of all is that I don't know that the Fed can do anything to stop the kind of encroachment of inflation that we are experiencing, especially in the energy sector. So to summarize, I think the price of poker, the ante has gone up. I don't think the Fed's going to be able to bring it back down. And the last time you had both metrics of inflation under 2% on year over year was in February of 2020.
Steve, you liked it, and actually the yields they ran up and came back down pretty quickly. I think they were listening to you, maybe.
So you got some people bearish. Here's this guy Steve is a little more bullish than the other guy on the report.
Steve, but
well, I think the initial trade, Joe, is the black boxes get involved, and then humans might take over and say, you know what, this is not
for now.
Right. For now, right? This is not a dramatic change in what we thought. And I want to just point Michael Strain out to some work that Alan Blinder did, which suggests that service inflation always comes down more slowly, and that the current decline in service inflation is equivalent to the decline in service inflation under Volcker. Not in the early part, but in the latter part, the 83 onward portion. He looked at the decline in service inflation back then, and he found that it is coming down. It always comes down more slowly, and that's because of a stickiness in prices. I want to point out one other thing, Joe, that I'm thinking about, and I've done a little bit of work on, but still working on it, which is it's not clear to me that union prices or union wages really set private sector wages. As much as I looked and stared and turned sideways all the charts, it looks to me like union wages go up along with private sector wages and don't particularly lead it. So I think what we might be seeing in the union negotiations is emblematic of what's going on in the labor market, but not necessarily the cause of what's going on or a cause for future inflation concerns. I don't know if Michael has a thought on that, but it just seems to me like we want to be careful with the chicken or egg thing here.
Union membership 7%.
Yeah.
So obviously it's not going to be but it does.
It sets wages for expectations for other groups.
It's either a symptom. It may not be a cause, but certainly a symptom of a very strong labor market. They're wrapping me. Thanks to Michael, Emily, Rick, and Steve. Appreciate it. Good to have you all on today. Thanks.
When we come back, we're going to talk about the state of M&A with a top voice from Goldman Sachs and why we should potentially get ready for a rebound in deals. First, though, as we head to a break, let's take a look at shares of Oracle. That stock coming off its worst day in more than 20 years. It fell 12% yesterday. That's its ugliest performance since the tail end of the dot-com bust. That slump followed an Oracle first quarter revenue miss and current quarter sales growth guidance that came in below expectations. Stock is off another 95 cents today. Stay tuned. You're watching Squawk Box, and this is CNBC.
Okay. So, we get two interesting counter perspectives on CPI. One person saying gas is going up dramatically. Gas right now at $90. We saw a couple of minutes ago, gas is at the same price it was September 2022, which really shocked me. I did not expect gas to be at those same levels. And then you got other people saying, look, outside of gas, it's not that bad. If you get rid of gas, it's actually okay. And I kind of agree with the latter. If you get rid of gas and you get rid of housing, which over the next months, it's coming down. It's like, it's going to come down. This is just math at this point. Now, if you said this August of 2022, you sound like an idiot because it's going up. But September of 2022, it's going down. It's going in September 2023, it's going in a different direction. It's just what's going to happen. And so it's a question of how patient can you remain until that happens and how the market can ultimately end up consuming it. S&P right now at 445. Let me actually show you the charts. I haven't shown the charts on this computer. Let me do that right now and show what we're looking at right here. Then we got to talk about this auto worker strike that I want to discuss as well, and in terms of what's going to happen in that sector. Real quick aside, because for the 340 people that are here, you might not have heard, I started the stream off by saying I bought a YouTube TV subscription. I'm still on the free trial, and I have many accounts to keep using these free trials, but I have a YouTube TV subscription now, so I get to access CNBC Live in the morning. And in between the commercials, the number one industry that is advertising in between, none other than pharmaceutical companies. I mean, I was in the car just driving like an hour ago, and I hear like 4 commercials back to back around like diseases and diabetes and heart disease and all this shit. I'm like, Pfizer. I'm like, yo, like it just hit me like, I don't think CNBC is ever really going to talk too bad about the pharma companies. And I don't think I'm being conspiratorial here, because every fucking other commercial is a pharma company. Like, that's paying the bills of all these guys. So it is, this theory that the pharma companies are keeping mainstream media intact. It's not that crazy. I mean, if every commercial is a pharma commercial and they're paying hundreds of thousands of dollars for 30 seconds, yeah, you're not going to talk that much shit about them. I mean, there is definitely a correlation there. And so maybe we can visit that topic on another day, but it is true. So with SoFi right now at $9, $9.01 in the pre-market, Apple at $1.77. We also have to talk about the Apple event in a little bit. Palantir, $15.59, flat in the pre-markets. Disney, flat as well. S&P 500, this is the main index we need to be looking at right now in terms of CPI, barely down 0.06%. It was actually green at one point at 446.50, now at 445.67. So really swallowed the report. The report was nothing too crazy to worry about. Let's look at the Qs as well. Qs 372, 47 down 0.09%, basically flat. So the main indices didn't have to worry too much about stuff that's going on, and it makes sense that they didn't have to worry too much because obviously CPI just wasn't as bad as what we would have to see at the end of the day. Oil price is not reflected in gasoline prices yet. I see equities coming down. We'll see as the market opens. I mean, that's the good thing about having the market open every day. Let's see what the market's reaction to it is. So far in the pre-market, if you remember the second to last CPI, this was June CPI. That's when we came in at 3%. The market went ridiculous. I mean, I think S&P at like 458 or something in the pre-markets. Like, it was just insane. And so the pre-market was an accurate reflector, and then throughout the day it sold off just a little bit, but we stayed pretty high until July 31st. That's when we got the massive rundown. So far in the pre-markets, we're not seeing any volatility because most of the market kind of expected what we got, and so it's going on from there. Okay, let's talk a little bit about Apple. We had the Apple event yesterday. I think we should discuss a little bit about Apple. We got 15 minutes until the market opens, and then we'll discuss the United Auto Workers strike and what implications that can have as well. Ultimately, I did not think that the Apple event was anything special. And I'm looking at it as someone who has used an iPhone literally since 2010. I begged my dad to get me the iPhone 4 for my 13th birthday. And he got it for me. And that phone, I literally have notes in my phone from 2010. I mean, like I've been an iPhone addict for a very long time. It's the only device I've really religiously used on a day-to-day part of my entire life. For the past 10 years. It's insane, but I did not see a reason to upgrade again, right? So iPhone 15, titanium, USB-C, they standardized the charging. They're now selling a boggle for $30 to be able to go from the old one to USB-C. Different colors. It's now in pink and yellow and green, which I don't like. Why hasn't Apple done that before? Like introduced like exotic colors of iPhones. I mean, I feel like they should have done that a long time ago, but this is the first time they're really doing it at scale. And they didn't increase prices. Prices were around $900, I think, or $999 on the top model. People were thinking it would go to $1,200 just to deal with inflation and stuff. Apple, for those that don't know, makes about a 60% profit margin on each of these phones. It costs them about $300 to make with economies of scale, and they sell them for about $1,000. So they're making a decent amount of money, 60 to 70% per phone. And they didn't raise prices. And I think the reason they didn't raise prices is because they already are afraid of demand for a couple of reasons. Number one, because people just don't feel the need to upgrade. I mean, just millions of tweets yesterday saying I'm not going to upgrade. Even if I get $800 to trade in this phone, if I still have to pay $400 out of pocket, $300 out of pocket, I'm not paying that money. Like that money could be better spent somewhere else. Like I could buy more stocks. Like I'm not doing it just for the upgrade on the phone. And then on top of that, China banning the iPhone from foreign government employees. China said today that they didn't do that. Great, because we're going to believe whatever China says. That means you're going to see a much more of a demand fall for China. Now, some analysts are saying that's only going to be 500,000 units. Okay, we'll see what the results are. But I think Apple's being a bit more conservative here in terms of raising prices and realizing, look, if we raise prices, we're only killing ourselves in the context of demand a little bit more. So maybe we need to be a little bit more conservative when it comes to being able to raise these prices. So you got that, and then you got some new series of the Apple Watch. I've never used the Apple Watch. I never really cared about the Apple Watch. In fact, in 2020, on my 21st birthday, my mom got me an Apple Watch, and I literally unboxed it, and I was like, Mom, you got to return this. And she was just like, you're so ungrateful for the. She was joking, but I was just like, I'm not ever going to wear this $400 thing on my wrist. Like I'm just never going to use it. Like I told her straight, I was like, you should return this and just, keep the money. Like I'm just not going to use this. And it's because like I've just never been bullish on it. Now it's a successful product. Yes, a lot of people do use it. But again, for the average person like me that has never used an Apple Watch, did they introduce anything interesting for me to get an Apple Watch? No. And so as a result of that, Apple Watch is not that interesting in the context of, any of the new updates they introduced. The iMac updates were not interesting. iPhone updates not interesting. The only thing interesting was the Vision Pro, and that thing cost $3,500. I'm not buying that, and I don't know how many people are going to buy that. So in the context of, let's see, look at what Kelly says. Yeah, I have an Apple Watch and I never wear it. Dude, it's not like it's the fucking time, bro. Like it tells you the time. Like you really need to my uncle, he came over on Sunday. He got a smartwatch with a touchscreen from Temu, that Chinese shopping app, for $12. And I was like, oh, you got an Apple Watch? He was like, nope. And I was like, I gave him a fist pump. I was like, yep, that's the right way to do it. This is that you buy the cheap shit because it's not that useful. So I just don't know where the growth trajectory is for Apple. after that event. I mean, let me know in the chat if you felt differently about the event. Now, granted, is Apple undervalued because they're just going to be able to sell a crap ton of these devices and the market's going to like it? Maybe. The problem is Apple is trading at a 28 forward price to earnings, and the stock is growing at 2% revenues, or the revenues are growing 2% year over year. The S&P is growing at 4% year over year in comparison, and it trades at 21 times price to earnings. So it's just it's a hard bet in the context of growth unless you see some type of S curve forming for Apple that I personally don't see. And there's just so many better companies in the market that are growing. I mean, for goodness sakes, Palantir is growing more than Apple. And it's like, I know they're different companies, but like at least you're getting something that's growing at the end of the day. So I don't know. 2 points that we're getting to a point in late stage capitalism where now companies are being forced to innovate, not for the hell of innovation, but because there's like if they don't innovate, they can't grow anymore. And if you can't grow, you ultimately have to become a value company because shareholders are not going to care about you as a growth stock, which means you're not going to get the premium that growth stock deserves because there is no growth. And so we're getting to the point in capitalism where people have to really start to recognize, do we want the technology to get to a point where we're just forcing features and growth for the hell of it? Or, can we have many 2008 moments where Steve Jobs comes up with ideas that can transform the entire planet? It's not that easy to come up with an idea like an iPhone to transform the planet, which is why I don't give Tim Cook that much hate for not being innovative. I mean, I think he's done an exceptional job as a CEO. Is he that innovative? No, but it's not that easy to be that innovative. And so we got to get to a point as a society where we ask ourselves, do we want these companies to continue putting out these bullshit products, iPhone 15 with no major improvements just for the hell of it and marketing it as if we're like dogs that are like idiots around understanding what they're trying to present? Or do we want to just accept that they're not growing anymore and treat them like value stocks? And I think eventually we will have to come to that decision because, I mean, I don't know how much more, like, what is Apple going to do for the iPhone 16? I mean, what can they possibly do, right? That is an existential question they have to deal with in terms of if for 4 generations you couldn't do anything. I don't know. And, the technologists that are like, just keep innovating. It's like, yeah, and there's a lot of sectors for innovation. Energy, ton of innovation. Healthcare, ton of innovation. That's why I love Palantir so much. Every single thing they're doing is innovating in these different verticals and industries. But for consumer products, I don't know what the innovation is outside of headsets, and no one's fucking using the headsets, bro. No one's gonna wear this shit. So it's a niche use case in my opinion. I don't think it's a mainstream thing. Let's get an update from CNBC, and then we'll get into some more news and the auto worker strike today.
Join us tomorrow.
Well,
You want to show
coming weeks, we think, which might.
what's destructive for us?
It's going to be
It's pretty
interesting,
clear.
especially given that Schumer.
Guardrails. Nothing says that our enemies or potential
Axis
enemies
of evil.
are doing the same.
My co-pilot.
Oh, Jim, this is probably the greatest technology advancement of our lifetime. Actually, it's probably the greatest technology advancement of any lifetime. Of any lifetime.
We're going to talk with Jim about that in a moment. But
Salesforce CEO Mark Benioff did give some explosive statements around the future of AI yesterday at the Dreamforce conference. And so we will talk about that. But Salesforce integrating AI a lot into their offerings, not really seeing in the revenue growth yet. But Mark Benioff is very bullish for the future on that.
first, our Emily Wilkins is down in D.C. with the latest. Morning, Emily.
Good morning, Carl. Well, AI is really getting the red carpet treatment on Capitol Hill today. Capitol Hill, home to a lot of meetings, a lot of issues. This is really unique. In less than an hour at 10 o'clock, right behind me here in the Kennedy caucus room, all 100 senators have been invited to meet with, as you mentioned, Elon Musk, Mark Zuckerberg, Bill Gates, a lot of leaders on tech and AI, as well as leaders from civil rights groups, from unions, to really start, or rather continue, a conversation about AI and what Congress's role needs to be. Now, this isn't the first hearing. It probably is the most blockbuster hearing with the biggest names. But Majority Leader Chuck Schumer has said that this is really about educating members. I know a lot of people don't think of senators as the most tech savvy. Senator Schumer is known for having his little flip phone, but he really wants to make sure that senators are comfortable with their knowledge of AI. Now, the actual legislation process is already underway in a number of different committees. Yesterday, Senator Richard Blumenthal, Senator Josh Hawley held a bipartisan hearing on their AI framework that would require certain high-risk AI models to be licensed and to be overseen by an independent agency. Josh Hawley told me yesterday that there need to be some bright lines for these AI companies.
We can't just allow industry to do what they want to do because they'll maximize their profits. B, I think we need bright line standards that protect kids, that protect workers to make sure that this technology actually enhances their wages, doesn't destroy it, protects creativity and people's privacy rights. So I think we've got a long way to go, but we're learning a lot.
Yo, that guy, Josh Hawley, he's got a hell of a voice for radio. He needs to get into radio. Goodness gracious, that voice seduced me right on the spot. That is an incredible, incredible radio voice.
Of course, there's still debates on the actual details of what AI legislation needs to look like, whether it needs to be one agency, multiple agencies, whether open source AI should be encouraged or discouraged. Expect a lot of that to be discussed today in the room behind me. The first 3-hour session starts in about a few minutes. Carl?
Emily, thanks. Let's talk about this for a moment with Jim. Jim, is this really constructive or is this theater?
No, I don't think it's theater because these chieftains of tech have not gotten together and they don't really know. And I know that I regard Jensen Huang as the most important person there, and he is the CEO of NVIDIA, and he is so pro guardrail, and he talked about that before he talks about anything else. But there are others who don't talk about that first, others who are talking about profit. Sam Altman, bit of a wild card, at all times a wild card. This group is filled with wild cards.
But he's,
David, you know these
Altman's
guys are
pro,
not all in one.
No, Altman's pro guardrails as well. I mean, he's,
no, but
he's
I'm saying you don't know.
Please save us from ourselves.
No, what I'm saying is that these guys are, when I hear the idea that they're only out for profit, David, do you hear anyone is just saying that?
No,
They're
I
all
really do
worried.
think, I agree with you, Jim, that
They're
this is
worried.
important, that this is important. You know, you could imagine, what if, knowing what we know now, we'd had a forum like this 20 years ago involving social media?
Right.
Where would we be?
God, is that a great example?
Right? What would have happened? What regulations would have been put in place? So I think it's a good thing. Obviously, the Chinese and the Russians are not invited to this forum. So my point being, even we can do everything we want in terms of putting up guardrails. Nothing says that our enemies or potential enemies are doing the same.
Okay, we got the market open in about 4 minutes. Let's do a very quick understanding of what's going on with the the United Auto Workers strike. And then we'll get into the market open. Thank you, 425 people, for joining me in the market. You know, this was an interesting day. We had CPI data, so I started at 8:20. I kind of liked starting an hour early and getting through a ton of news going into the market open versus starting at 9:20, which is only 10 minutes before the market open. So I don't know. I might sit on it for the rest of the week, and maybe we officially start the market open 8:30 every day, 8:45, and we go through all the headlines. Like, I kind of liked it. And I know every day we don't have a CPI headline, but maybe there's enough news to actually go through it and make it a fun show every single day. We'll see. We'll see if we can expand this from 9:20 to 8:30 to 10 versus just 9:20 to 10. Okay. Leaders of the United Auto Workers Union are considering targeted strikes at a small number of factories run by each of Detroit's 3 automakers. Those are the big 3. The union's leadership discussed smaller scale strikes at a meeting on Friday, and local union leaders were told about the strategy on Tuesday afternoon. So this happened relatively quickly over the past couple of days. The people didn't want to be identified because they weren't authorized to disclose details. Now, here's what they're talking about. Strikes at individual plants would be far less costly to the union, which could have to pay $500 per week to each of its 146,000 members if they all go on strike. General Motors, Stellantis, and Ford would be the 3 companies that they would be striking against. In that case, the union's $825 million strike fund would dry run in just under 3 months. So the union has $825 million to last for 3 months of strikes. 3 months of strikes would be horrendous for inflation, because when you have less cars being made, you have less supply. Less supply means more not enough combating of demand. Average car price right now is $783 per month. So if you have less cars, the prices for cars are only going to go up. Average insurance premiums are going to go up. It's just going to be a catastrophe. It's going to be a nightmare on catastrophic levels if we don't have a resolvement to this, which is why I think this will be resolved. I don't think it's going to be that big of a deal. But just like the other guys going on strike, the Netflix actors, all the SAG people, the people that want to get paid to not and out of AI take their jobs, we're seeing the same thing here. Now, this is in the context of AI. I was watching an interview this morning for them with one of the president of the unions. This is about corporate profits. The argument is that the offer should give pay increases, eliminates different tiers of wages, has protection against inflation, and should increase wages by around 40%. Or increase the nominal wage increase by 40%, something along those lines. Because one of the wage president, the auto worker union president, was citing the fact that CEOs of Ford, GM, and Stellantis have increased their take-home pay by 40%. So he was like, if the CEOs of these big-ass automotive companies in a time of inflation are taking home 40% more than they took a couple years ago, why the hell can't the workers can't? And now that gets into a larger debate around labor and all this type of stuff, but that was his argument. And so I believe we will get a resolvement to this. It's just a question of when it will be resolved, but it should end up happening hopefully in the next week or two, because we cannot have strikes. I mean, with the difference between the media strikes are AI is deflationary and potentially having some job losses in media, which doesn't really impact content inflation that much. That's actually good for inflation to come down overall if we have some job losses. If we lose these jobs because they make the cars, that leads to less inflation because you have more supply. If that supply goes down, there's going to be more inflation. All right, September 13, 2023, 9:30 a.m. Thank you all for being here. The stock market is now open. Wake your ass up. Here we go. CPI came in at 3.7% year over year. The S&P 500 is green. The S&P took in that CPI report and spit it right back out and said, we are not going lower yet. You might be able to take us down from 450, but you're not taking us down from this 446, 445 level yet on this CPI news. We'll go back to that in a little bit. QQQ up 0.10%, basically flat in the morning, but it is green. Apple 176 up 0.20%, down from yesterday. They lost about $2 yesterday, now at $176 after their latest event. Palantir deal, for those that are new, if you rewind a little bit, even though I'll give a TLDR in a second, Palantir announced a new partnership with Babcock Defense Industries in the UK. That has them up $15.63, up 0.25% on the day. I think it's a really important deal. The market probably doesn't understand the point of this deal. Like, the market never understands the point of their partnerships, but it's an incredibly important partnership with a defense company in the United Kingdom. Walt Disney, $83. SoFi, $9.01. Let's see if SoFi can maintain 9. It fell below 9 last night, but it got up to 9.15 yesterday morning, or 9.17. So if you can stay in this $9 range and start to consolidate before we get Q3 earnings in November, where hopefully we might be gap profitable, maybe we end off the year in that $10 to $12 range in the context of SoFi. Tesla back in the 270 levels, $271, up 1.5% on the day, up 4 points. Tesla early investor Ron Barron today went on CNBC, and on CNBC he said, what did he say? He said that Tesla is going to increase 400 to 700% in the next, 400 to 700%, 400 to 700%. So 4 to 7x over the next 7 years. So he believes by 2030, Tesla will be potentially 4 to 7 times more valuable as it is right now. And then on top of that, he believes SpaceX will be worth $500 billion. So Tesla and SpaceX over the next couple of years. Ron Barron, one of the early investors in Tesla, has made 20 times his original Tesla investment, has not sold any of his Tesla, but has sold about 25% of the Tesla stake for his clients. Believes that Tesla can go up 4 to 7x. So someone like that who was early in Tesla, you definitely want to take their word seriously. He was going through the dojo argument, going through the overall S-curves that Tesla has coming up in regards to Optimus Prime and just a variety of different things with robo-taxis. So, I mean, he's someone you definitely want to consider, given the guy's made 20x on his investment and he believed in Tesla when very few people believed in Tesla. NASDAQ at 13,814, HIMS at $6.49, TFC Truist, $30.28. Truist again announced a bunch of layoffs a couple of days ago. That's why the market's giving them a little bit of love, because they are up today, given they announced some of the layoffs that were coming down. Enphase, $122. Enphase continues to go down just a little bit. It's up from the 119 levels now at $122.98. C3 AI, $28. Nvidia, $448. Nvidia down from the 454 levels yesterday. So Nvidia definitely getting rid of that premium of $515 it got on the earnings day. Then it recovered and it fell to about $486, which was still a nice premium, now at $448. So investors sold off a bit of Nvidia. They ultimately didn't want Nvidia to be able to keep things going, or they didn't want Nvidia to be able to keep their stock price action going. But Nvidia right now at $447. Google at $135.76, up down about 0.2%. Celsius breaking the 200 level now at $202. Bitcoin getting out from that $25,000 range now at $26,000, hit a high of $26,491 right now at $26,167. Kathy Wood, a little update on Robinhood, bought another 439,000 shares of Robinhood yesterday. This comes one day after buying 522,000 shares of Robinhood. That's basically a million shares of Robinhood in a couple of days. I think the reason for that is because she just thinks it's undervalued. There's no catalyst for Robinhood. In fact, wait a second. Oh, that's coming out a little bit later. We should be getting August updates on Robinhood's numbers, monthly active users, assets under custodies, net inflows and deposits, but that'll be out at 4 p.m. So at 4 p.m. we'll have those results for Robinhood. Either she thinks the August metrics are going to be phenomenal and the street's going to, be excited for it, or she just thinks a company with $7 billion in cash that's now GAAP profitable, going to do about $500 million in revenue over the next couple quarters, 477 last quarter, and is worth $3 billion for the brokerage because their market cap is $10 billion and $7 billion is in cash, is undervalued. I would tend to agree with her argument, especially given brokerages like E-Trade were acquired for $13 billion. So I think she just thinks it's an undervalued company, and as a result, she has sold a bunch of Shopify and she has bought a ton of Robinhood. Palantir now at 1557, down 0.3%, 0.13% for the day, and S&P 446 up 0.22%. It's going up. CPI has not impacted the S&P 500. There you go. CPI has not impacted the S&P 500. Not bad. Not bad at all. We're seeing the results come in for CPI. So if you're new to the stream, top line CPI 3.7% on the day. Just wasn't enough for the market to worry too much about it as a result of what is going on. Let me share a quick clip of what I was talking about with Ron Barron discussing his potential for Tesla to continue to go higher. And then I will get into the specifics of the CPI report for those that didn't catch that. So let's share this and keep going from there.
Straight to our big guest this hour, Ron Barron. He is the chairman and CEO of Barron Capital. You know him well here. And Ron, it's great to see you. Thanks for coming in this morning.
Thanks for inviting me.
We got a lot to talk about, but I think it's hard to not start with Elon Musk because you have been a huge Elon Musk supporter, an investor in his companies for a very long time, a booster of everything he's doing. And yesterday, Walter Isaacson's book dropped on Elon Musk. So it's been in the headlines. It's been something people have been focused on. Walter himself will say, look, he's an incredible innovator, an incredible entrepreneur, but he has these demons that chase him. And the book lays this out in great detail, starting with his relationship with his father. What have you thought? I know you haven't had a chance to read it all. It's a big, long book. You just got it yesterday. But what do you think of the stories you've seen to this point that suggest Elon even knows these issues, he struggles with it and can't quite get out of the way of being his own worst enemy? I mean, you've said that he is the key man. He's the reason you invest in these companies, and the biggest risk is if something were to happen to him.
So I met him in 2010, and it took me 4 years before we began to invest. In 2014 to 2016 is when we bought the stock. We made about 20 times on our investment there. And then in SpaceX, we've been investing in that since 2017. And we're one of the largest investors in SpaceX.
It's not a publicly traded company,
No,
but what about your valuation?
We have about $1.7 billion invested right now.
Wow.
It cost us $700 million. $400 million of that is me. On Tesla, we have 17.5 million shares. 4.5 million shares is me. So we've been an investor for a long time, so I obviously believe. And initially when we invested, it was making me crazy when I was seeing some of the things that he was doing, as much as I admired him. But I do think that, and I calmed myself down, and I said, yeah, I really deserve to make a lot of money by investing in this and by staying with it. And we deserve. And what I thought was that what the point that Walter made yesterday was that untethered, these things can happen. And if he was conventional, it would have never happened. So he's the guy who got us electric cars. He's the guy who got us to space. If he was a conventional person, then he was in Saturday Night Live. And they said, hey, dude, do you think I'm a normal person? I got you electric cars and I'm going to take you to Mars. Seriously, am I going to be normal? And
now, what's interesting here is this is the common divide between the investor and the founder, right? So as you can look at this Tesla stock chart right here, Ron Barron, I believe, invested in 2014, if I'm not wrong, even if it was 2015, 2016, but I'm pretty sure it was 2014. You look at from 14 to 20, about 6 years of nothing. You see that green light right there, 14, nothing, right? So for 6 years, he's thinking this guy is an idiot. Who did I give? I think they put in $750 million, like some ridiculous number into Tesla, which is why they made billions and billions of dollars for their clients. He's thinking like, for 6 years, how did I invest this money into this eccentric, crazy guy thinking that he's going to make EVs end up becoming real? And then it happens all at once with exponential growth, right? And so as a founder or as an investor, what Ron is trying to shed a light on, which I am trying to understand a lot more around Elon Musk, is that the guy has a very unique way of getting things done and ultimately delivering results for shareholders that will take time to be able to get. But if they get there, they're going to get there dramatically. Ron Barron later in that interview says he believes Tesla can go up by 4 to 7x by 2030, and SpaceX, which is valued at right now at 137 billion, will be worth about $500 billion. So that's about a 3.5x on SpaceX. Additionally, we got news today that Starlink has done $1.4 billion of revenue so far in 2023. In 2022, it did 221 million. So they basically 5x the revenue, which is, I think, a subsidiary underneath SpaceX, which is good for SpaceX shareholders in the context of Starlink growth. And so a lot of that growth all comes at once, but you got to kind of deal with the person being as crazy and eccentric and weird as they are in the meantime to be able to get to that level of growth. And I think that's important to understand in the context of Tesla, even with Elon doing the crazy shit he's doing now with buying Twitter and saying all the nonsense. If you read a little bit into the new book that came out about him, which is just some fascinating insights, he has this thing called demon mode, and he wants drama. There was a bunch of interviews in the book basically saying with family members that are close to him, like he thrives on drama. When things are going well, he like will start some drama. He'll like fire people at the company. He'll do some crazy stuff. And that's definitely toxic, not healthy, right? We get it. But he needs the drama, and buying a company for 44 billion that's basically going bankrupt and trying to save it. For him, it's like the thrill of doing that is what keeps him alive and ultimately turning out to be the hero at the end, which he has turned out to be at the end for SpaceX, Tesla, Neuralink, Boring Company, etc. And so it's something important to understand as a Tesla investor when we're trying to gauge the psyche of what Elon really is trying to do at the end of the day. Kind of like Carp, investors don't always love what he says and how he operates. Yeah, I think you have to understand that. I mean, like most investors, including myself in public companies, it is not the job of the founder or CEO to give a fuck about us, quite frankly. It is their job to maximize shareholder value, but to do it in the way that they believe they can do it, especially if it's a founder CEO. If it's like a Slootman type of guy, if it's a suit, then yeah, you're a slave to the shareholders. And I don't mean that in a negative way, but like that's what you're brought in to do. If it's a founder CEO and you're investing in a founder's vision, a founder dream, your job as an investor is to shut the hell up, maybe give some constructive criticism here or there, but let that founder do its thing. And if you don't want to do it, then you don't invest in that founder, right? You don't invest in that guy, because at the end of the day, you're investing in a person when it's a founder-led company. You either believe Zucks can pull it off or not. And you might have to go through some really hard-term volatility, but if you believe in Zucks, Zucks is going to figure it out. And so in these founder CEO type of companies, it's incredibly important to kind of see how that goes on. Here's some more specifics on CPI again for the people that are here. Some people that were here in the morning, they got this information, but index increased 3.7% over the past 12 months. This is an increase from 3.2% last quarter. 3.2% going into, last month going into 3.7%. Index for gasoline was the largest contributor to the monthly all items increase. If you look at the gas prices today, Brent crude, it's at $90 right now, which is insane, because this is where it was. If we look at the 1 year back in 2022, September 13th, 2022 was $92.22. September 13th, 2023, $91.64. That is where oil has gone from there. If oil was at March levels at $71, we would more likely than not have CPI under 3%, given over 300 basis points of gas or of the CPI increase was as a result of the index for gasoline. So a far majority of CPI was shelter and gas was a far majority of those two when it came to gas, meaning energy, for the increase that we saw in August. I don't think those two are sustainable, especially with housing inventory coming out into the market. So rents are going to come down. Shelter is definitely going to come down. In July, the index of gasoline was not the largest contributor. Shelter was the largest contributor. So over the past month, given the Saudi oil cuts, all of that has changed. And as a result of all of that changing, we now have gas being the largest contributor. I think gas and rents are going to come down. More supply is going to hit the market when it comes to housing. So we shouldn't see these levels exist for a long time. At least I think in the next 2 months, it will be resolved. But if I'm wrong about that, then we're going to have CPI and inflation become a little bit more stickier than not. Obviously, the market was fine with it. So let's go back into the charts right here. The market swallowed up that report and basically said, look, that's okay. The market expected 3.6, 3.7. 446 were green on the S&P 500, green on the QQQ. Let's go to the NASDAQ. I didn't take a look at that. NASDAQ also green, 13,805, up 31 points. Because at the end of the day, the market thinks CPI will come down and the Fed has lagging indicators. And if they have lagging indicators, then inflation should be down significantly than from 3.7 by December. Rocket Lab, this was a stock that lost 10% of its value yesterday because the CEO and founder sold, I think, like less than 1% of his stake or something. It was a couple million shares. I'm not sure the exact numbers, but it was an insignificant amount of his shares, to my understanding. And the company dropped 10% on that news. So we talked about yesterday Rocket Lab being down 10%, and I thought maybe they had a failed rocket launch. It wasn't a failed rocket launch. It was Peter, the CEO, selling some shares. So the stock went down based on that. He hasn't sold shares in a long time, so I don't know why investors acted as volatile towards a selling of shares, but I guess because it's a speculative growth company, you don't want to see the CEO sell any shares yet. CEOs are going to sell shares, right? It's going to happen. So you kind of just got to take the Band-Aid off and get through it. But that's why Rocket Lab fell yesterday. Fubo down 2.55% on the day. It was up about 4% yesterday. We'll see where this one has to go. Charter Communications or Spectrum, remember that company Disney was beefing with? Apparently T-Mobile's buying them. A report came out yesterday that T-Mobile intends on buying Spectrum. Let me just pull that up real quick. T-Mobile Spectrum for about 1.3 to 3. Yeah, T-Mobile trying to buy them for about 3.3 billion from Comcast. So Comcast currently owns Spectrum, and T-Mobile, to get more 5G airways, is looking to buy them for 3.3 billion. If that happens, then that would be interesting because technically T-Mobile would have the licensing deal with Disney if that happens. So we'll see, what ends up going on with that, but not good news for Fubo if Disney continues to maintain its partnership with Spectrum. Nvidia turning green as we get about 15 minutes into the market open at 451, Spotify at 153, Airbnb at 146. Airbnb continuing to keep its S&P 500 pump. It has not fallen since it got into the S&P 500, up 8% last week. Netflix at 435, Robinhood at 1077. Some of the Bitcoin stocks are down, even though that Bitcoin is up at 26,000 today. Ginkgo Bioworks, where is that company at? Kathy has not bought in about a couple of weeks, even though she bought like 7 million shares back in August. $2.05 right now. People have asked my opinion on this. I still think it's overvalued. Maybe long-term, definitely not overvalued. Short-term, I think it's incredibly overvalued. Cell engineering programs have to go up because biosecurity revenue is down, given that COVID does not exist anymore in the context of Ginkgo's use cases. So I don't see the growth there right now to be excited for Ginkgo. Great story, exciting, but the growth is just not there to be paying $4 billion for this company. SMCI at 271, Snowflake at 166. Kava, the famous IPO that went from 22 to 44 and hit a high of $58.10, is now down to $35.25. Instacart IPO is going to happen in about a month, and so is ARM's IPO. I think we might see the same result with Instacart and IPO, Instacart and ARM maybe doubling or being up 70-80% on investment day. Maybe they maintain that level for a couple of weeks and then they come back down to reality. So it will be interesting. I will not be participating in those IPOs, but it'll be interesting to cover to see how those numbers turn out. Instacart numbers actually look really well. They did $700 million just off advertising. I think they're doing like 2.2 billion per year, and the valuation's like 9 or 10 billion. So trading at 5x price of sales, that's not that crazy for a tech company, but no momentum will be retail heavy or institutional heavy, and ultimately where it's going to end up after a couple of weeks of the IPO. So not bad. We got a decent CPI and we got a green market. It's not too bad at all in the context of what the market expected today. DRK, thank you all for being here. SLG is at $40. We talked about that yesterday. So SLG is pretty amazing as well. This was a company that was $20. We talked about it in March on Finance Junkies. Now at $40.20. You got a dividend and you got a double, which you don't get that likely in REITs. And so there are certain opportunities where the shit goes down really badly, and there's a massive opportunity there. So SLG is up. Shout out to Dividend Streams. He's on Seeking Alpha and he's also on Twitter. He gave me the advice for SLG. He texted Chris and I. He's like, "Yo, buy SLG." And we looked at it. We were like, "All right, SLG is the right stock to buy." So that's why SLG has gone up as well. Tesla at 274. That is correct. Tesla's now at 274. Palantir closing above 16 would be nice. All right. Speaking of Palantir, let's get into the Palantir news. So let me give the high level TLDR. I'm coming out with a video later today where it goes a lot more deeper, but let's just pull up the report. Palantir has partnered with a company called Babcock. If you are immature, you will be laughing as I read this stuff. If you are not immature, you will be able to handle me talking about this stuff. But Palantir has partnered with an international defense company headquartered in the United Kingdom called Babcock. And here's a little bit from the press release. The partnership will leverage Palantir's AIP, the AI-enabled instance of the company software that will aim to transform how the Babcock workforce captures, integrates models, and builds data-driven solutions. Unlocking the power of data in this way will enable Babcock to make better informed data-driven decisions, maximize platform availability on customer assets, and understand how to derive even more value from the organization's data. And that is the deal that came out today. Now, I don't want to spend a lot of time on this because I talked about this already about 30 minutes ago, and I will have a video coming out on this later today. But the high-level TLDR is this is a company that does $5.3 billion of revenue per year, and it works intimately with the Ministry of Defense. The Ministry of Defense gave Palantir a $91 million contract back in December of 2022. This is the network effects of Palantir being able to show off. If Palantir is able to work with one of the leading defense hardware tech companies in the UK. And that company has deep ties with the MOD, or the Ministry of Defense, in the UK. And Palantir has a deal with the Ministry of Defense in the UK. It's a trifecta of Palantir working with the MOD and Babcock to come up with the best suite of software products via Foundry and now AIP on top of that, in order to make Babcock better, more data-driven, make better decisions, be more effective, efficient, streamline operational workflows, all of that stuff. That only happens because Palantir basically acquired the United Kingdom as a client, the entire country, back in 2020. So they go there in 2020, work on the COVID vaccine stuff. Then they get a deal with the Ministry of Defense because they were so good in that. Now they're getting commercial, international enterprise deals that work intimately with the defense agencies. And as a result, Palantir should be able to get more defense contracts in the UK. And they should be able to, in my opinion, replicate this process in Germany, in Sweden, in Lithuania. Work with the Department of Defense, the defense ministries that are in those European countries, and work with the international defense tech companies and hardware companies, because every state, every country needs a Ministry of Defense, a DoD, and they need a hardware company building their helicopters and rockets. Like Raytheon doesn't, and they don't make all the helicopters for every country in the world. They work intimately with the United States, but there are Lithuanian defense companies that work with the Lithuanian government. If Palantir can work with those two entities in every single NATO country in the world, the DoD of the country and the defense hardware company, to build them software, that is going to essentially integrate Palantir within the fabric and the architecture of the defense, the defense paradigm of those countries, and for a long time. And if the software is good, they're not going to leave, which is what we've seen in the United States. So that's why I think this deal is so incredibly important for Palantir. But the market obviously doesn't get it, and I don't expect the market to get it, because this is one of those deals where you have to be a real long-term shareholder to understand why this deal is happening and where the impacts of this deal is going to be over the next 5 years. And if you do, you're going to get handsomely rewarded for that. And if you don't, then you're not. The thesis still has to play out. Obviously, Palantir is to show revenue growth from that, but that is my argument. And finally, AIP was given to them for free, most likely, because Palantir is not monetizing. This is a company that does $5 billion a year in revenue. What is AIP worth? That is my question. You do $5 billion in revenue. Is AIP worth $10 million? Is it worth $20 million? Is it worth $2 million? Because if it's worth $20-30 million and Palantir recognizes all that revenue in one quarter when they turn on the spigot for AIP, there's going to be a lot of revenue coming in. And I would want to be a shareholder at that time, when it ends up happening. Would be nice if Britain didn't leave the EU. Yes, that is also very important for Britain not to leave the EU. I joked about buying Instacart, but I might pick up some more shares after looking more into it. I will not pick up shares on the IPO, but I might pick up shares eventually when it falls from the IPO. The numbers do look good, quite frankly. The numbers do look good. It's just a question of, how high is the conviction to buy it on IPO day. That's the most important thing. Cool. So that was kind of the core stuff we had today going into the CPI report. Again, top line inflation coming in at 3.7%, and no one really worrying too much about it. Let's get an update on tech CEOs that are going to Congress to speak and discuss about the future around AI. And let's see what people have to say.
Now, Republican Senator Mike Rounds, he's going to be moderating the AI forum today with Leader Schumer. Good morning to you. Trying to understand what you are hoping to get out of this, and also what you make of some of the criticism and critiques from folks like Hawley.
Well, I think that the other members of the Senate have a real desire to learn as much as possible about it. They've all got different ideas about how it should be done. And we simply wanted to bring in these individuals who are directly related with AI on all sides of the issue, and to have them speak directly and candidly with as many members of the Senate as we could possibly get in one room. We're not going to get all 100 members there for a 7-hour session, but we hope that between them and a number of members of their staff, we would get a pretty good showing. In the meantime, the individuals that are there can share on a candid basis what they see moving forward. And we knew that if we opened it up to begin with, they would all start out with a canned opening statement, and that's about as far as we'd get. We want to be candid. We'll have other educational seminars like this, and the vast majority of those will all be open with cameras allowed. But on this particular one, we thought we wanted to start out with something special for the members to try to draw their attention and have them be actively engaged.
Very unusually, folks like Sam Altman, who's behind OpenAI, and so many others in this space have talked quite publicly already about what they think of as the need for regulation of their own industry. It's a unique scenario and situation, because typically leaders of industry don't call for regulations of themselves. What do you make of that? Do you think that that is genuine? And if so, what does that mean? Or do you think that that's an effort actually to stall regulation?
No, I think it is genuine. I think, first of all, you've got lots of different opinions about how much regulation and who should regulate. We wanted to start out by making sure that all of these individuals and the folks that are in the AI industry recognize that the United States is the place to develop AI. We don't want it being developed elsewhere. We want it being developed here. We think the benefits of that are substantial for our citizens, and long term, it's the right thing to do. But with that comes a responsibility to do it in such a fashion that everybody knows the playing.
So there you go. You got Elon Musk, Satya Nadella, Jensen Huang, Mark Zuckerberg, Sam Altman, and Sundar Pichai. These are the tech CEOs that are going to be on the Hill and trying to convince Congress of the correct AI regulation. You know, this is very important for you if you own AI stocks, if you own any of these companies, if you own Palantir, because this stuff informs the allocation of defense spending on AI in terms of military use cases of it, but also just in general, how much the United States wants to be a beacon of innovation for AI versus other countries in the world. Obviously, the United States, I think, should win this versus China and Russia, because if we don't, then, you know, we're not going to have the best AI tech companies on the planet. And that's actually the focus of the video I did on Palantir's Alex Karp last night. If you go to my latest video, it's basically him talking about why in America, uniquely, software companies need to take advantage of the AI revolution that we're having right now. All right, last thing we're going to do for today is the word of the day. You know, I actually really liked doing this from 8:30 to 10. I usually do the morning stream from 9:20 to 10. For the rest of the week, it will probably be 9:20 to 10. But I'm going to sleep on it. Maybe next week after that, we start at around 8:45 and we go to 10. So an hour and 15 minutes. And we go through a bunch of news before we get into that 9:20-ish range when I start. So it would be about 35 minutes before I usually start. I kind of liked it. It was kind of fun. I know today we had a lot of news, but every day there's usually enough stuff to kind of go through and talk to. And I'm already up early. So I like kind of getting started early and seeing what we do from there. So we'll see if next week we start at around 8:30, 8:45 for the market opens. Skookum is the word of the day.
Skookum.
Skookum, not skookum, skookum. Okay, large, powerful, impressive. I would argue that unlike the thing in my pants, today's CPI was not a skookum, because it was not as large, powerful, or frankly as impressive as what the bears thought CPI could end up becoming at 3.7%. So CPI was not that skookum today. And overall, that has been decent for markets. We're seeing a little bit of decline right now in the charts, a bunch of stocks going down, but nothing as dramatic as we saw a couple last month when we came in at 3.2 versus 3.0% month over month. Okay, that's it. Skookum. Make sure you use the word of the day. Tweet at me of how you use the word of the day, or respond in any of the comments on YouTube on how you use the word of the day. I'm always curious when people use it. People have been using it in some very interesting ways over the past couple of weeks that we've been using word of the day. So I always love to know what people have to say around the word of the day. Thank you, everybody. I appreciate it. It means the world to me for joining. Have a great, great Wednesday. I'll see you a little bit later on Finance Junkies at 7 p.m. And I have the Palantir Titan update a lot more deeper into that contract coming out in a couple of hours. That video will be live later today. Thank you, everybody. Have a great day. I'll see you later. Bye-bye.